Hello, I'm Jeannie Whitehouse, and this is Mattie Eagle at Brotemarkle Davis and Company. We're here to give you a quick introduction to how to deal with this form FSA-510. And that has been provided under the USDA program called, what is it called, Mattie?
It's called ERP2, Emergency Relief Program 2, Phase 2. So this is for growers who did not have crop insurance, is what this is targeted towards.
This is a specialized form that allows you to qualify for additional benefits. If you do not meet the test that we're going to talk about, you may still qualify for benefits of up to $125,000, provided you file by Friday, July 14th, which is fast approaching, which is why we're doing this last minute. Rather informal presentation. Okay, Mattie, so here's on the form, in order to qualify for these additional benefits, which go up to $900,000, what do we have to determine?
So first we have to determine that at least 75% of the individuals or the legal entities average adjusted gross income for 3 prior tax years was derived from farming, ranching, or forestry. So for the wine industry, that's going to be grape farming and estate wine production. So we'll start with what is AGI for the entity.
So when I read that, if I'm you and I'm trying to fill out my own form, or if I'm Mattie, the tax expert that's joined me on this call, and I have a form in front of me and I have to fill this form in, the first thing I have to figure out is what is meant by AGI for different entities. So Mattie's going to talk us through that first. And then there's this issue of what 3 applicable tax years we use for determining that. And that was mandated through the statute about where you look based on what year the loss was incurred. And then the final question is, what in fact is farming, ranching, or forestry income to do the calculation so that we can come up with this 75%. So the first thing we're going to talk about is the AGI question.
Yeah.
So Matt.
So AGI is generally referred to on a Form 1040, which is filled out by individuals, but this particular application puts in a definition of how they want to calculate AGI for partnerships and S corporations and C corporations. So for an LLC or LLP or another partnership that files Form 1065, you want to look at page 1 of your tax form 1065 and add together the amount from line 22, which is ordinary income or loss from business, and line 10, which is guaranteed payments paid to the members. So that is your total AGI if you file a partnership tax return.
So should I bring up the tax form just to show?
Sure.
Form 1065, we're going to go to the front page of your 1065. So if you are a client of a tax person, you can pull out your copies of prior year tax returns. We're going to tell you which years, and you're going to go to this line 22 right here, and whatever number is there, that's what you're going to pull out. Okay.
And then line 10. Add line 10. And
then add line 10 is guaranteed payments to partners. So it's right on page 1 of the form, straightforward, easy to get. This is the easy part, right, Mattie?
This is the easy part.
Okay, so that's for 1065 filers. That can be LLCs, LLPs, or an LP, as traditional partnership entity. Okay, so if you're an S Corp, you have different requirements, different places to go. So go ahead, Matt.
Okay, so on an S Corp return, Jeannie, I'm not seeing this slide anymore, but
oops, sorry. Okay.
That's okay.
Bring that back up. There you go.
Okay, so on an S Corp return, we're going to add line 21, which is ordinary income or loss, and add back from page 3, line 12A, charitable contributions. And
that total is now going to be your AGI. And
that total is going to be your AGI from S corporations.
And probably screw up the screen sharing again. So what form are we doing? 1120S?
1120S. So we'll first go to page 1 and look at line 21.
One right here, ordinary business or loss, right there. We want the number in that cell.
And then page 3. And 12A is going to be charitable contributions.
That goes right here on line 12A. in that form. And so if you've got your copy of taxes from prior years, you're going to go pull those forms out and look for the information on those line items to complete the application. Okay, you're seeing my screen again?
Right.
Slide. Okay. Next is single member LLCs or sole proprietors who file a Form 1040.
So this one is the easiest one because it actually has a line that says adjusted gross income on line 11. So that's what you'll use.
See, right here. Beautiful thing right here, a line 11, and color here says adjusted gross income. So you're going to capture that line item off your 1040.
That's right. And then on an 1120 corporation return, we're going to use the amount from page 1 and add line 28, taxable income before NOLs and other deductions, and then line 19, charitable contributions. And that's going to be your adjusted gross income.
Is right here. So we're going to go to line 28.
28.
Here. It says taxable income before adjustments for NOL carry forwards, net operating losses or other unusual deductions. So line 28 is the closest thing we can get to adjusted gross income. And then we have to add back what else?
Line 19, which is charitable contributions deducted.
Right here.
Yep.
And pull out your tax file from prior years and get that information. So that gives us the denominator of the AGI calculation. Now we've got to figure out what goes in the numerator.
Right.
You impressed with my ability to remember old math terminology. I struggled for a minute there. Okay, so there's that. So now we got to figure out what years we're looking at. You're still seeing my slide?
Yep,
Okay.
I can see it. Yep. So now we're going to figure out which years to use. So which years of your tax form you need to pull out. So for cash basis grape farmers, the 2020 harvest revenues usually get recognized on your 2021 return because most of your customers are going to pay you in the following year for that harvest year. And in that case, you would use tax year, you pull out your forms from tax years 2017, 2018, and 2019.
If instead I collect all of my fees for the 2020 harvest in 2020, then I would refer back to 2016, 17, and 18 years to do the average.
That's right. That's right.
All right.
And then if you're an accrual based farmer or you have your winery and you report the whole thing on accrual basis, then most of your 2020 income is going to be recognized in 2020 when you bill for those grapes that you sold. And we'd be talking about the 2020 program year, and you'd pull out 2016, 2017, and 2018 tax returns.
So this may be confusing to people who don't understand the difference between cash and accrual, but basically,
that's right.
When you harvest the fruit and deliver the fruit to the winery who's using it, that triggers the income recognition on the accrual basis. And that should happen in 2020 for that harvest, or would have happened if you had a harvest. Right. So that means we would look at 2016, 17, and 18 for the average. And again, we're looking at the denominator of the fraction that we're going to calculate here.
Right. And we need to do this calculation for each of those 3 years. Yep.
Yeah.
So now becomes the complicated question of what is farming income. So part of it is going to be straightforward. That's going to be on Schedule F of your Form 1040, 1041, 1065, or 1120S. The Form 1120 C Corporation does not have a Schedule F.
And neither does the 1120S if you're an S corporation.
The S does have it. The 1120S does have it.
And whatever form package you have.
Yes.
Okay. Other filers have to use. So what is this about, Mattie?
Okay. So basically what we're saying here is that wineries who use their own fruit to make their wine, so estate wineries, can count their wine sales that are made from their own fruit that they farm as farming income. Okay. So if you don't purchase any fruit from other vineyards, then all of your wine sales are also farm income.
Okay.
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 And, but there are other things we have to look out for because some wineries might have rental income. You know, they might have part of their property that they rent out for events, or they might rent it out for any other reason. So we would have to take out any non-farm income and related expenses like rental properties. Custom crush services is something that a lot of wineries provide, and we'd have to remove that from the farm income portion that we're going to put in the numerator.
So
we suggest that you look at revenue and try to divide up your revenue into different sources and basically extrapolate that out to your adjusted gross income. And that's probably a pretty good guess of your percentages from farming and non-farming sources.
So this would be a percentage that you derive by looking at what you're doing on the revenue side. And that makes sense. You apply it to your net income. If you don't have
apply it to your net income,
this is your calculation that you want to use. You want to take the adjusted gross income off those years that we're analyzing and apply the revenue percentage. What percentage of my revenue is farming, and therefore that percentage of my AGI is also going to be farming.
That's right.
Okay, I get that now. I think when we discussed it earlier, it wasn't as clear. Okay.
It's not that easy to understand. But
it ain't clear no matter what we do, but we're doing
exactly.
that. Okay. And Mattie, it's great to be able to do this on short notice. Okay, so these are times, Mattie, when I raise up the flag and go, I can't do it, help, I need
right.
help.
Right. So if you purchase grapes to make your wine, in addition to growing your own grapes, you probably need to call your accountant to help you do these calculations. And when you have significant revenue besides farming and wine sales, so rental property and custom crush and merchandise sales and special events, you do a lot of weddings, stuff like that, you need to probably call your accountant to help you figure out whether you have 75% of your income is from farming.
Okay, so if people have questions, can they email you, Mattie?
Yes, you can email me.
Now and Friday.
Email me between now and Friday, and we'll try to help you do your application. But email me today and tomorrow is probably a better idea.
Okay,
right?
So Mattie at bdcocpa.com. Our phone number at the firm is 707-963-4466.
That sounds right. But you're missing a 7 there, Jeannie.
What?
707. There
Yes,
you go.
thank you. So we have a number of folks on our tax team. Not all of them are available, but Mattie will take your email. She can help. This is a complex thing, and we've had very little time to absorb and figure it out. And Mattie was willing to jump on here and make this recording so that we can help people. So thank you very much, Mattie.
All right. Thanks, Jeannie.